welcome everybody. Thanks for attending the webinar. My name is Randall Brown, and I'm a Senior Dynamics NAV Consultant here at OmniVue. And today we're going to be going over the year-end closing process in NAV. And I have a presentation for you today. And it's going to be a combination of PowerPoint slides and also looking at the product. What I'm asking you to do is to please just view the presentation. And if you have any questions along the way, please write them down. And at the end of the session, we can take questions. And then we'll close it up. So without further ado, let's get started. So what exactly do I need to do to run the year-end close? It's not a very difficult process, but it will consist of some cleanup work. Mainly, you want to make sure that everything is posted. So all of your journal entries need to be posted. You need to run your adjust cost post to GL routine if you deal with inventory. Now, there are some systems that are set up to automatically do this with every transaction and some that are not, and I'll show you the difference. Then you run a routine that closes the fiscal year. Then you're going to run another routine that creates a journal entry that will reverse all revenue and expense accounts to retained earnings. Once you review that journal entry, you're going to post that journal entry. And then we're going to talk a little bit about what happens if you need to post another journal entry to a closed year. And then we'll talk a little bit about the reporting aspects of what we just did. So what exactly happens during the year-end close? Well, first off, it ensures that the balances that you print on your income statement and balance sheet reflect the current retained earnings and net income numbers. If you don't close the year, it will reflect all the open periods in those numbers, which tends to look funny when you're trying to report on the current period. What it also does is it closes and locks all the fields for the periods that you close. What this does is prevent entries from being posted back to those periods that don't have special criteria attached to them. It also makes it to where the length of these closed periods cannot be changed. So you cannot go back and change anything that has been closed. What it also does is if you do have to go back and post to a closed year, it marks those entries with a special date. And in NAV, you can go back and post to a closed year. The routine is simply to close the income statement again. So you can run the close routine as many times as you want, just making sure that the last thing you do is run that routine to get all the numbers trued up. So to reiterate, we want to make sure that all your journal entries are posted. So that could be all your general journals, your recurring journal entries, any item adjustments, any sales and purchase journals. So all of those journal entries that are in the system need to be posted. Then we need to run the adjust cost, post cost to inventory. What I'm going to do is hop over to the product, and we're going to look at this run post cost. So a lot of systems, like I said, are set up in the inventory setup to check automatic cost posting. If this is checked, then all of your entries are posted when the order or the adjustments are made. If you do not have that set up, then you will need to run the routines for post-inventory costs to GL, which will move all of your related costs that have been accumulating in the inventory subledger over to the general ledger. run your account schedules, which would be your balance sheet and income statement, and you need to file those. This is just a check to make sure that you have these account schedules ready to go so that you can verify the numbers after we finish this exercise. Next, you're going to want to look at the date ranges that people are posting to. So if we look at that, in the user setup, we can set up date ranges here that restrict people from posting to periods that you don't want them to. So this might be a good exercise to go back and make sure they cannot go back and post to a closed period. And then we need to go ahead and start looking at the routine that's going to close the year. So if I go back to my financial management, and I go to my periodic activities, and I go to my fiscal year, the first thing we need to do is look at the accounting period. This is a list of the closed and open years in our system. And for demonstration purposes, we're going to close the year 2010. So the first thing that I like to do is go ahead and make sure that your current year is also in the system. And if not, you need to go ahead and create that new year. When you run the create year, what it does is it looks at the first year down here at the bottom that's open. It establishes that typically you want a 12-month period and you want them to be 1 month long. But this is where you would change this criteria if you have non-calendar month type years. And you click OK. And what that does is it creates the new year. It is important to make sure that you have the year created, or you won't be able to post any entries and you'll get when you do that. So after we create the year, we want to go ahead and close this year. So we have a button up here, we click close. Uh-oh. Oh, shoot. It always happens, doesn't it? Okay. So when you click close year, you're going to get this message that says this is the year that we want to close. So it should be the range that you're looking for. Do you want to close this fiscal year? Yes. So what that does is it puts a close flag on all the year, and it also locks these periods down. So from this point forward, any entry that we create is going to be notated with a C in front of it, denoting that it is a closed period entry. So that's really all it takes to actually close the year. So the next step is that we need to create a journal entry, which is going to transfer all of the income statement balances to an account on the balance sheet. Typically, that is your retained earnings account. Then we're going to go and look at that journal entry, and then we're going to post that journal entry. So once we have closed the year, we back up and we say we want to close our income statement. So what comes up is a window where it's going to default in the date that we need to close. You can choose what template and what batch you would like to close this to. You give it a journal entry number, and you tell it what account you would like to move all of this revenue and expense to, such as your retained earnings account. And if you use dimension in NAV, you will need to close by these dimensions. Then you click OK, and it runs through, and it automatically creates the journal entry for you that you can go and view. So this is the journal entry that we created. And notice that it does have a C in front of the date. You cannot change that when you're posting to a closed period. But that is how you can tell the difference between a regular journal entry and a journal entry that was created in a closed period. If I thumb down to the bottom of this journal entry, what we look at is the last entry was our retained earnings account. And this number right here represents our net income for the year or for the period that you're closing. And that number should tie back to your net income as of, in this case, 12/31/2010. So just to go over this one more time, we did not change the date format from the journal entry that it created. The batch job will transfer all those entries to a specific journal, but it does not post them. And I recommend that you choose the retained earnings account to start with so that it puts the balance of all of those accounts into that account. When I post this journal, it's going to reverse all of the revenue and expense entries in the system and post that difference to retained earnings. So when you go back and drill down on those revenue accounts, the balance is going to be zero, but all of the detail is still going to be there. If you use additional reporting currencies that are set up, these journals are also automatically posted. So in this case, all we're going to do is post and print this journal, and it's going to run through and remove all the revenue and expenses from the account. Now what happens when you have to make a journal entry, such as you send off the financial statements to an auditor, and they come back and say that you need to make some adjusting entries to your system? That's fine. Go into your general journal, make your journal entries, just key in the date as you normally would. Typically, in our case, for demonstration purposes, that date would be 12/31/2010. Make all the journal entries that your auditor has recommended and post them. You do not need to put a C in front of these dates in order to post these entries. NAV will automatically put the C in front of those dates. Then, after you post that entry, you will go back and run the closed income statement batch job again, which will move the revenue and expense accounts that you posted to the retained earnings account again, and you would post that entry, and then you're done. After you're finished, you can go back and run your account schedules again to verify that everything posted correctly. If you use analysis views, you're welcome to go and run those again. Or if you use an external report writer like Jet Reports, then you're welcome to go and run your Jet Reports, which will bring everything out of NAV into Excel and offer you that balancing and reconciliation criteria that you're looking for to make sure that your period was closed correctly.